so finally, after a long weekend, I'm back with a new news video. And of course, I just want to just take this time to thank you guys for supporting my channel. Okay, I'm almost hitting the 50 subscriber mark. Of course, it is very little for a lot of people, but to me, I've been creating a lot of videos in the first half of this year. And I think that I'm starting to see a little bit of results. I'm starting to see a little bit of views, and I'm very, very happy that people are watching my videos as well. And of course, I'm very, very happy that I'm able to give out some free information to you guys about what's happening in the world in general, especially in the US, and hopefully help you guys make some money as well. But anyway, today I am going to go through some of the things that actually went through over the long weekend. So let's cover some news today. All right, so let's move on with EU banning Russian oil. Okay, so EU, which is the Europe Union, basically sent out a form of a sanction package, which is their sixth sanction package, in order for them to actually ban Russian oil. Okay, they actually talked about it for quite some time during March and April. So yeah, finally, the ban is out and they are actually going to go through with it. However, it's not going to be a complete ban. It is going to be, I think, an embargo. So by doing an embargo, it's an oil embargo, basically pledging to just kind of curb the prices of oil. Okay. So pretty good that they're doing something like that. But of course, this is not going to be good for oil prices. I just want to touch upon this point a little bit more before I actually continue with the news. Oil prices definitely is going to be going up, okay? Because if European Union as a whole, let's just say Europe as a whole, they need Russian oil the most out of everyone else, okay? Because they are one of the biggest client of the Russian oil, okay? And for them to actually say that, you know what, we are going to be curbing purchases, we are going to be banning Russian crude, by them actually doing something of that nature, what actually happens is that it's true, they are going to be suffocating Russia's main source of revenue, okay? They can easily suffocate them from the revenue, hoping that this would actually end quickly. This is kind of working like a little bit of a quantitative easing of some sort. Okay, so yeah, props to the EU for doing something like that. But in the short term, we are definitely going to be seeing oil prices continue to go up and up and up and up. Okay, so I'm not sure when or how long will this actually take for oil prices to stay at such high levels. Okay, right now we're looking at oil prices going back up to the March highs again. Okay, which is very, very scary for us to look at oil prices, and it's even scarier for me because tomorrow I have to actually refill the tank before I go for my work and such. So yeah, that's gonna be horrible. But yeah, all right. So anyway, let's move on to see this. The EU accelerating preparation for ending purchases of Russian oil come after Germany, Europe's biggest economy, changed its mind and swung behind the idea of an oil embargo. Okay, so just to let you guys see what an oil embargo means, okay, the leaders for the first time said that they will impose an oil embargo on Russia over its invasion of Ukraine. Take a big step forward in an economic fight against Moscow that is already reverberating in global markets. Okay, the embargo would include an exemption for oil delivered from Russia via pipelines, an amount that makes up 1/3 of EU oil purchase from Russia. EU officials said that by the end of this year, the embargo will cover 90% of previous Russian oil imports. It would be phased in over several months. Okay, agreement to ban export of Russian oil to the EU. This covers more than 2/3 of oil imports from Russia, cutting off financing for its war machines. Okay, so like I said before, I do think that what the EU wants to do is just try to just suffocate the main source of revenue for Russia. But let's be honest here. We still have China, we still have India, where they are still big buyers of Russian oil, especially in the past 2 weeks or 3 weeks. We have actually been seeing China and India seriously buying on the dip for Russian crude as well. So I'm not sure how much is it going to be helping by suffocating Moscow's revenue, well, their main source of revenue, which is their financing for the war machines per se. But yeah, this definitely is going to be affecting oil prices. But at the same time, this kind of just makes China and India win more, kinda. So I don't know. Good tactic, bad tactic. I don't know. Okay, oil gains as EU commits to a partial Russian crude ban, a pledge among European Union, blah blah blah. Okay, got it. Okay, the Brent crude went to $119.41 a barrel. Okay, I think the highest that we actually had was I think about $125 per barrel or $130 per barrel, and that was March high or February high. Okay, so I'm saying that it's almost back to 120 again. For a moment in time, we actually went down below $100 per barrel. Okay, that was actually not bad. I thought that was all right. We were at like I think $98 per barrel. Right now we're back to about $118 per barrel or so. Let me see if I can get Brent crude prices up and going in a bit. Okay, anyway, let's move on to the next one. Fed official supports raising interest rates at fast clip for several meetings. Okay, Christopher Waller said he doesn't favor stepping back from half percentage point rate rises until clear evidence of inflation slowdown. Okay, so for people who do not know, Governor Christopher Waller is one of the most hawkish member in the federal board. Okay, and by most hawkish simply means that he is one of the person who wants interest rates to go up as much as possible in order to get rid of inflation as fast as possible. Okay, so that's the hawkish one. For the dovish one, basically say, you know what, we can do a 25 basis point. In fact, we can just not increase at all. Those are the dovish members. Okay. So Waller, one of the most hawkish member in the Federal Reserve Board, basically says that let's increase the interest rates at a fast pace again for several meetings. Okay, so in the previous FOMC, what we actually received for the information was for the next couple of meetings. Okay, we were expecting the June meeting and the July meeting to be 50 basis point increment, aka 100 basis point increment. We should raise our neutral point to about 2% or so. Okay, and what Waller wants is basically anything above neutral, and what he wants is actually going to be, what he says is going not stepping back from half percentage point rates rises until clear evidence of inflation slowdown. Okay, honestly speaking, I feel that I can kind of understand where he's coming from as well. Okay, so first of all, we usually like to take into consideration of Paul Volcker, okay, which is back in the 1970s when inflation was at like 15%. Paul Volcker, which was the chairman of the Federal Reserve at that time, basically increased rates all the way to 16% to front load inflation, to basically rug pull the entire market, and then that way they actually brought down the inflation down all the way to about like 7% in the next run. Okay, that is basically rug pulling the market, front loading your interest rate to defeat inflation immediately. Okay, that's not what we want right now. Apparently, especially according to Jerome Powell, that's not what he wants. Okay, he don't want the stock market to just basically go down to flames. But we'll talk more about that later on as well. Okay, so the federal official basically says that even for the hawkish member, he's not saying that okay, you know what, we have to go up by 200 basis point every single meeting, because right now inflation is at about 8%. Okay, and right now our interest rate is about 1% or so. Okay, even if we were to have a 200 basis point increment, we will still be at 3%, which is 1% above neutral rate. Okay, and that's still not enough to get rid of inflation. That's how far away we are from the actual rate of inflation, whereas where the actual neutral rate where we are at right now is at as well. So there's a huge jump for us to actually get to. So I can totally see where he's coming from. But the thing that I really want to actually emphasize more on is over here, which is until clear evidence of inflation slow down. Okay, because for the next month of a CPI, which is basically the CPI for May, which is going to be coming out on the 10th of June, okay, we are expecting inflation to be dropping by like 0.2%. Okay, that is not clear evidence of an inflation slowdown. Okay, it simply means that it's true that inflation basically peaked in the previous month. Okay, it's not confirmed either because it could just be an inflation plateau. Whereas when the June CPI data actually comes out, and then if it continue to go back up again, and then we're like, oh, okay, yeah, we're in a plateau again, that sort of thing. So what Christopher Waller actually wants is that, for example, in the next CPI or the next PCE, which is what the Federal Reserve usually use, to actually see inflation actually drop by like 1%. Okay, 1% or even 2% is when Christopher Waller basically think, oh, okay, if we actually drop by 2%, maybe at that time we will be okay with a 25 basis point increment instead of a 50 basis point increment. Okay, but what I actually get out of this entire thing is that even if we are actually going for a half percentage point increment, Christopher Waller, being the most hawkish member in the whole entire Federal Reserve, is not even being that hawkish, because expecting half percentage point increment for the next few meetings. Okay, I'm not even going to say the next couple of meetings. I'm just going to go hawkish and just say for the rest of the meeting for the entire year. Okay, we are expected to have 7 more. We are expected to have 6. No, we are expected to have 4 more meetings. 4 more meetings till the end of the year. Okay, and even if we have 50 basis point increment for the 4 or 5 meetings for the rest of the year, we're still looking at what, like 250 basis point increment, which raises us to the neutral rate to about anything less than 4%, which by the end of the year, I don't think that inflation is going to come down all the way to 4% either. Okay, I do think that inflation will most likely be hovering about 4%, and that's only with the contingent that we are actually getting half percentage point increment every single meeting. Otherwise, I would think that we'll still be hovering somewhere in the 5% to even 6% region as well. So I do personally think that this is actually sort of a good news, but nevertheless, the market is not going to particularly like this as much, especially with what happened with the EU side of things. Okay, you have to also take into consideration the moment EU partially banned oil. Okay, oil prices are going to go up. Okay, oil is definitely going to be reflected in the CPI and also PCE. And those are going to be contributing factors of a rising inflation rate again. And that's going to be the concern that we have. Okay, just think about it this way. Okay, the next CPI that we're going to get on the 10th of June, okay, is going to show oil prices going up a little bit, because we are only getting it at basically the last day of the month. Okay. But what I will be more worried about is for the June data, which will be coming out in July. We will see a substantial jump out of nowhere just because the European Union banned Russian crude, or partially banned Russian crude. And I think that would also be a contributing factor for a lot of other things to come in as well. And let's not forget, with how the whole economy is recovering, airline fares are still going to be going up, which is one of the biggest contributor that we have from the previous month. Okay, so I think airline fares is going to be something that we have to really look out for as well. I think food is going to be a huge player yet again. Okay, especially for Singapore. One of my better performing video talking about the food shortage happening in Singapore. Okay, it's the same thing. Okay, food shortages is going to be a constant concern for a lot of us as well. Okay, and I think even for the states, I do think that even for the states, they would also have somewhat of the same concern, where they might think that because of food issues, if this war continues, the alternative sources of those other commodities are going to be increasing in prices as well, and that's going to cause this sort of a domino effect and so on and so forth. So that's going to be my concern as well. So I think unless if they actually Paul Volcker this entire thing, I don't see inflation dropping drastically. So yeah, I would expect 50 basis point increment for the rest of the year. That's my own personal opinion. Of course, that's also the opinion for Christopher Waller for now. Okay, and I do think that there's going to be a news that's going to be after this that I kind of want to talk a little bit about, where my opinion might change a little bit. So just stay tuned for that. Okay, so anyway, let's move on to the next one. All right, so Fed fears hit mortgage bonds attracting investors. Okay, mortgage REIT Annaly Capital has raised about $3 billion in recent weeks to buy into better mortgage bond market. Okay, so for better mortgage bond market, so why? Okay, so for mortgage bonds, you have to think about it this way, because as the Federal Reserve continue to increase interest rates, what is that going to be causing? Which is prices on mortgage, interest rates on mortgage are all going to continually going up. Okay, right now mortgage rates is about like, if you were to buy a house in the United States, right now, if I'm not mistaken, mortgage is about what, like 5% or 6%. For the 30-year mortgage, you're paying like a solid 5% or 6% as well. So a lot of people are basically doing it in foreclosure. People are actually just selling their houses. People are just trying to panic sell, get out of the housing market because they do not want to pay mortgage bonds. Fair enough. I would probably have done the same thing. Okay, just slightly earlier, because we had kind of expected this to happen for quite some time already. Okay, but the thing is, why in this article they are saying that it's attracting investors. Okay, investors right now, they actually want to get into all these mortgage bonds, so-called battered up mortgage bond market, is because this might be so-called a time to really buy the debt. Because when you actually get into this and then they rent it out, you get rental income, and then the whole mortgage REIT for Emily Capital, they get more revenue, and then they just kind of just go down, give out dividend payout and such. So it's kind of, in a sense, some form of buying the dip. So yeah, that's kind of what happened when the Feds kind of want to increase rates. Next up, China's economic downturn shows sign of easing. Economists say growth will likely remain subdued as long as Beijing sticks to its zero tolerance approach to COVID-19. Okay, and like I said before, I do think that not just Beijing, okay, China as a whole needs to change their approach to COVID-19. I think they're treating COVID-19 too heavily as a virus that can destroy the entire ecosystem. Of course, through history, especially with what happened in the March of 2020, we know what COVID can actually do. Okay, but if China is not going to be easing up, they are going to constantly go down this whole rabbit hole for a recession. Okay, I already made multiple videos about how China is in a recession as it is. Okay, you can check out my videos on my channel. Okay, I always talk about all this. Usually I talk about this on my news section. And also I do weekly videos about this as well. So like I said before, I do think that, if China do not change their approach, they are constantly going to be staying in this recessionary state. And that's going to be the concern that we have for China. Okay, so next up. Biden, oh my God, let's do this. Okay, Biden. This is going to be a big one because yesterday, I think yesterday it was about midnight, 2 a.m. or so, I think. I received a notification from Bloomberg, I think, or from Wall Street Journal, saying that Biden is going to have a meeting with Jerome Powell to basically discuss about the inflation, how they're going to be fighting inflation, and talking about how Jerome Powell is the reason why Biden is not getting a good re-voting power, because of his how his voters is losing confidence in him. It's gonna be a huge thing. Okay, but I really want to talk more about this. So let's see. Okay, Biden pledges to back Fed in effort to combat high inflation. Okay, outlines inflation fighting strategy ahead of the meeting with Federal Chairman Jerome Powell. Okay, outline a broad three-part plan for addressing inflation, which is running at 40-year high. Okay, say it was likely that the pace of job growth could slow from a monthly pace of 500,000 jobs to about 150,000 as a necessary result of the Fed's effort to combat high inflation. The most important thing we can do now is transition from rapid recovery to stable, steady growth, is to bring inflation down. We know that, okay? That fighting inflation is our top economic challenge right now, as with every other country, of course, okay? The Fed is in the process of raising interest rate at the most aggressive interest rate, currently in the range of 0.75% to 1% by a half percentage point at its next two meetings, June and July, which is what I mentioned before as well. Okay. While elected officials favored low rates in the past to boost economic growth, lawmakers in both parties have broadly supported the Fed's effort to raise interest rates, with some criticizing the Fed for having waited too long to do so. of course, we all make mistakes. Even for myself, I also thought that it was the right move for Jerome Powell to actually wait. But of course, we don't get everything right. Every practical step to make things more affordable for families and to boost the productive capacity of the economy over time. Okay, Mr. Biden cited a list of proposals, including to upgrade infrastructure, boost housing production, lower drug prices by giving Medicare the power to negotiate with pharmaceutical companies, fix disrupted supply chains, and target fees charged by foreign ocean shipping companies. Okay, comments nearly 25-year custom in which presidents have refrained from publicly weighing in on monetary policy. The public pressure sometimes fueled speculation in financial market that the central bank might change policy to satisfy political demands, particularly at interval where they coincide with policy shifts that Mr. Powell and his colleagues were driven solely by changes in the economic outlook. My predecessor demeaned the Fed, and past presidents have sought to influence its decision inappropriately during periods of elevated inflation. I won't do this. That's a lie, because if Biden don't do this, technically Biden kind of did it, okay? But I don't wanna get an FBI call, so I'm not gonna talk more about that. Okay, I'm not gonna talk more about that. All right. Anyway, touch upon the whole Texas shooting. Okay, you know what? Texas shooting aside, well, not really aside, actually, Texas shooting inside, there was also another shooting that happened, and then Canada banned their guns. And end up, US is not really doing anything, and I'm still very, very confused by what they're actually going to do with this. I think gun lobbying have basically been one of the biggest and most controversial topic in the past 2 weeks or so. And what's the worst is that over here they said the police basically said that they made the wrong decision in waiting to storm the shooter, saying the police incorrectly thought no children were at risk despite repeated 911 calls from inside the classrooms and such. Similarly, like I said before, I don't want to talk too much about this, and but I just want to highlight the fact that yet another shooting happened, and I think this is like the fourth shooting in the last 2 months. And yeah, it's pretty bad. And I think that this is one of the reasons why I'm glad that Singapore don't really allow guns. As much as all the guys going through national service, we are all trained with rifles and such. And luckily, we are not really able to actually hold our own guns as well. So thankfully for that. But I'm just very, very confused with what United States is doing with their gun laws. But yeah, fair enough. I do think that if they want to bring in the fact for the gun lobbying side of things, the economy, the economic side of things, and the politics side of things, for that is a whole jargon for us to really get through on. So yeah, but I'm not gonna do like a moment of silence or anything for them, because I don't think it really helps. I feel that people should just do better. So yeah. All right. Anyway, let's move on to the next news. All right. Putin needs help from China and India on oil Europe doesn't want. Oh, okay. This is going to be huge, because for Putin, he expected the European Union to get a huge chunk of the oil that they usually buy on a yearly basis or a monthly basis or quarterly basis, whatever it is. But right now, when European Union basically said, you know what, we're not going to be buying, we're going to be curbing a huge amount of oil that we're going to be buying from Russia. Right now, Putin needs to find there are only 2 willing buyers of their oil who do not care about the whole, the views on how political this oil is going to be. So Putin said that he may need to count even more on China and India should the EU ban Russian oil, which they did, and also in Asia able to process the type of crude Europe typically buys, which I highly doubt. But yeah, with the partial embargo, this is going to be costing Putin up to $10 billion a year in lost export revenue. Okay, and I don't think, because let's be honest here, China and India is not really doing exceptionally well, with China in recession and India right behind as well. I think India has also been reporting superbly high inflationary number. Sri Lanka, which also I'm going to be talking about it right after this as well, is also reporting 40% on their inflation as well, something ridiculous. As well. So, I don't think that Putin can really expect China or expect India to just be like, all right, guys, can y'all just help to buy up even more oil that the EU do not want? Okay. And the more this actually happen, the more Russia have this huge amount of oil reserve, and the more people do not want all this unethical oil. That's just going to leave Putin up and dry. And clearly, $10 billion a year on lost export revenue. That's going to be huge for Putin for him to actually continue the war without this much of a capital. Though that could eventually leave more of Russia's flagship crude, an oil brand that has been popular in Europe, needing a new home. There'll be limited buyers in Asia. That's because the grade can easily be refined in large quantities in countries such as Sri Lanka and Indonesia that don't have sophisticated processing and blending capabilities to handle the highly sulfuric type of oil. This can lead to China and India, which do have the refineries that can process euros to pick up extra barrels, with Shanghai emerging from its month-long lockdown. Chinese state-owned and private refiners may have a renewed appetite to buy more from Russia. I highly doubt it. However, there is likely to be a limit on how much China and India can realistically buy too, with the two countries already mopping up a record amounts of Russian oil that steadily been shunned by Europe since the invasion of Ukraine. Exactly what I've been saying. They have been buying the dip so much right now. The dip just went okay. Well, the dip didn't actually go down. Okay, the dip did not dip even more. It's just that suddenly the supply just became more. But it's kind of weird because in this case, the supply became more, but the price of it also kind of increased because everyone needs it, but everyone do not want it. Yeah, that's sort of deal. I don't know, man. Sri Lanka inflation hits a record of 39% as shortages persist. Food inflation rose 57.4% in May. Non-food climbed 30.6%. Sri Lanka is seeking emergency aid to ease shortages. The headline: inflation surged to a record in May amid continuing food and fuel shortages as the country struggles to lift itself out of the worst economic crisis. And like I said before, I don't think it's just going to be Sri Lanka. It's going to be a lot of other developing countries that's going to be getting a lot of food and fuel shortages. Okay, not only do they have lacking refineries for them to actually do with all those oil refineries and such, food is going to be a huge sector for them as well. Okay. Looking at India, even for India, they are also going to be banning, well, not really banning, they're going to be putting a cap on export for sugar as well, which was reported last week. So, you're starting to see this sort of chain falling down, this domino effect starting to fall down piece by piece, where you start to see food shortage happening every country, one at a time. So, yeah, that's going to be a little bit scary for us to really look at. All right, next up, we got Fed Governor Christopher Wallace says he's prepared to take rates past neutral to fight inflation. We actually already explained that. So next up, U.S. Treasury yield rise as investor weigh inflation and global economic growth. Okay, the Eurozone data, blah, 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 8.1. Okay, we got that. There's been progress over the past 2 weeks. It appears we have met peak inflation and peak hawkishness. Okay, but the key is the speed of the decline. And right now it's not fast enough to say that this key to the bottom has been satisfied, which is what I've been saying. Okay, I get that I get that there's a huge possibility that we reach the peak inflation. What I actually uploaded, I think it was last Wednesday. Okay, I was talking about peak inflation and such. Next up, we got peak hawkishness. Okay, I actually uploaded it last Saturday. My bad. Okay, but anyway, we also got peak hawkishness. Okay, which is fair. Okay, but like I said before, Christopher Waller wants to see substantial, clear evidence that inflation is clearly slowing down. Okay, and if we are seeing 0.2% decrease in inflation, that's not going to be called substantial evidence that inflation is slowing down, nor is it clear. So, because of that, I don't think that that's going to be helping with the tightening policies that's going to be set up by the Feds. Okay, I do think that, if we, however, like I said before, I do think that if we start to see 1.2% decrease month over month via some of the CPI that's going to be happening. Of course, that will be better, but I don't think that's going to be happening simply because, oil prices are going to be going up. And like what I said before, food shortages, we have not even seen the actual brunt of the food shortages that's going to be coming. So yeah, that's going to be a whole nother ballgame for us to really look into. But anyway, yeah, I think that's all we have for today's news. Oh, okay, actually I want to look at crude prices. So yeah, over here. Crude oil, WTI, currently per barrel at $118.74. Pretty bad. So yeah, I think that's all I have for today's news. Once again, I just want to thank you guys again for supporting my channel thus far. If you have watched till this to this point, if it would be great if you guys can drop me a like. Thank you so much for watching, and I'll see you guys tomorrow.